Money. Good morning. How are you doing?
Good morning. Good, how are you?
Yeah, not too bad. A little rainy day in Vancouver today, but pretty good. Welcome, everybody. We are the Trader's Journey coming out to you from Vancouver, BC, Canada. And welcome. Welcome to our podcast where we talk about the market using our three pillars. This is a journey, this is a process, and we invite you to come along with us so we can help you with your journey and help you with the process. So, Isaac, how was your week?
It was good. Good weather in Vancouver.
Yeah.
Nice. Yeah, it was nice, but I don't know what's going on still every week. I don't know what's going on. I don't know what's gonna happen. So much uncertainty. I think that's the most popular word out there, uncertainty.
Yeah, seems to be the narrative right now, right? I think it's we just gone over the 100 days, right,
Oh yeah.
of Trump in office, right, and you know that's done. I mean, people usually kind of that's always the marker, what's happened in the first 100 days, and I mean, it's been chaotic to say the least.
Yeah.
It's been, it's been fun. I mean, you know, for me, it hasn't been bad. I mean, we've had some nice trades. We've had some, you know, not so nice ones. I think, again, it's that, okay, we're low, should we buy? And it's in a good thing, right? And, we've had those conversations with you looking at things and, you know, I believe we're not ready yet. We've
We're
got this. Well, I think right now we've got to push on the S&P, right?
this
We've
week.
got
This week it was like 5 day,
yeah,
five
yeah,
6 days like on the green.
right.
Yeah. So I don't know, like very optimistic, I would say. But you are a conspiracy theorist that think it will drop. This is just a fake bullish reaction, and is gonna trap everyone.
I think so. And why do I think that? Because the data is telling me so, right? We're looking at the data, we're looking at numbers, and
What data is telling you this?
well, if you look at the GDP, it was down. We'll look at that in a second.
Okay.
But you look at you know numbers from non-farm payroll came out good, right? But if you dig deeper, it's not so good, right? You look. Everything is based not on the moment; it's based on a period of time.
Mm-hmm.
What is a trend, right? We always say trade the trend, right?
Yeah.
So what is a trend? Explain to me what that is.
When something follows a pattern for some period of time. Yeah.
Yeah, over time,
Yeah.
right? So if we do that as traders, if
Mm-hmm.
we follow that as the Proco what it is, we should also follow that with the data. No,
Mm-hmm. Mm-hmm.
that
But
that's all I'm saying.
there's no data following the trend.
No, there's holes in it. There's indications coming that oh this is not good. Oh, like we're getting. We go over in a second. We'll look at it and oh sod it. We're looking at it right now. Let's do it right now. There's no point hanging on. Right. This is like let's look at that. I didn't share my screen, did I? Um, See, that's a pattern. You see, you could trade that. You could trade the fact that I don't share my screen too much because that's usually what happens. But sometimes I get it, and most of the time I don't. You can make some good money on that. See, trade anything. All right. So if I, where are we? Oh, here we are. Okay. So what were we looking at? Like See, the biggest thing is, right, is, oh, we want to lower interest rates. So the big thing is, oh, we got to look out for, excuse me, we got to look out for inflationary scenarios, right? So what do we look at when we look at inflation? What do we look at? What does the Fed look at?
Inflation?
Yeah, to see if there's inflationary concerns. What do they look at?
I guess. I don't know, to be honest. Employment and price on the resources. I don't know, to be honest.
PCE,
PC.
PCE, core
Ah,
PCE, because this is the, I'll show it up here. So
yeah,
this is the change
change
in the
in
price
price.
of goods, right? Yeah.
Yeah.
So excluding food and energy because it's so, it differs from the core because it only measures goods and services targeted towards consumed by individuals. So individuals like you and me, right? And
Yes.
it's the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead to central banks, blah, 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 blah. Right. Now, so you look at this number, you go, oh, just like Trump did.
Zero.
There's no inflation. There's no inflation. Look, there's no inflation. Yeah, in this particular time, there wasn't. It didn't rise. Nothing was going up. That's good.
Mm-hmm.
However, we need to be a little bit. Look at this number here. This
Previous
number from
point
last month
five.
was right, but it was actually revised from point 0.4.
Uh-huh.
Right. That's not the major thing. Let's look at the graph over time. Right. So over time, right? So this is now where we are,
Mm-hmm.
right? But look, we've been up in this cycle for a while, and then we've got this big drop. Now, what would cause this big drop? Well, are people not changing their prices? Or what is the reason? Are people not buying? I don't know. It seems very kind of like
Hmm.
suspect to me. And yes, we all know that I am a conspiracy theorist. But I also know that Trump, when what he wants, he pushes to get.
Mm-hmm.
And the biggest argument between him and Powell was inflationary.
Mm-hmm.
Soon as this came out, soon as this came out, I won't tell you, I'll show you. Let's see if I can see it here. No, I don't have it. That's a shame. See if I can find it. No, don't think so. Oh, that sucks. Should have copied it.
What's about?
Um, well, as soon as it came out, Trump said there's no inflation. They've got to drop rates.
Mm-hmm.
He made that announcement, right? So the first thing is, and it's like, oh my God, yeah, right, okay. So
He doesn't
is
get
what it is.
tired until he gets it.
Well, that's what I'm thinking, right? I'm saying to myself, he just doesn't want to lose. And I'm thinking, maybe the numbers are correct, but I know so many times that you see a number, and then that's not really the true number, right?
Mm-hmm.
It's like oh, we made a mistake, oh, we got to change it. So this is where you have to be careful with this stuff. This is why I say, you know, don't be too immediate to.
But you think also the market has been reacting positive because of this PCE?
No,
No.
no, I don't think. No, I don't think so. Not. I don't. Well, I don't know. I wouldn't.
Okay.
Right? But maybe people looked at it and said, "Oh, yeah, this is good news." It's but it's zero. Why would they? I don't know. Can't answer that question. I can only answer the question of what I see and what I'm comfortable in risking.
Mm-hmm.
I can't see it anyway. Anyway, trust me, he did come out and say it. He did say, no, there's no
Inflation.
inflation. But that's only this month, right?
Mm-hmm.
This PCE. You need, if you want to trend, you need at least two, three, four that are showing a significant drop. Yes or no?
Yeah, yeah.
Would you agree on that? Yeah. And that's what I'm going on about. That's what I'm saying. I don't think we have this. I'm looking at it and going, well, I don't see anything there from that. Like, let's look at this. Look, Jolt's job openings was 7.19, so that was a little drop. So then we go down to GDP. Look at this, advanced GDP quarter on quarter. It minus 0.3%. Minus. GDP is gross domestic product. Look at month on. Oh, that's CAD. Sorry. Like, so what is this? What's going on here? Well, why is it low? Producing tariffs. What is it? I don't know. But they were forecasting zero point 0.2. That's quite a drop. They had 2.4. What was it changed from? 2.3. So it was 2.3, and then it was 2.4. Then they said we're going to get a zero point 0.2 quarter on quarter, and then we're going to get. Now we
Minus.
actually ended up with minus. It's like minus, really? So what went on? No, right? It's suspect, right? And then you get this, right? Because if you don't have good GDP, what does it mean? You've got a slow, stagnant economy, right? Then you look at other numbers and it's like, well, okay, look at this number, ISM manufacturing, right? They forecast 48 and they got 48.7. But see, that's kind of like you think, oh, well, that's really good, right? But, you know, really, it's more of above 50, right? You want it above 50 because you want to see that growth, right? I mean, you look at these numbers, right? And you look at 49, 50, 50.9, right? 49.9, and you've seen a slow decline, right? See the slow decline, right? So that's consistent of a decline. But you have to remember, March gave 50, April gave 49, right? May gave 48.7. So what do we want to see, right, at the end of May and June? Another 47, or less than this? Then this will start saying, yeah, you know what, it's getting a little bit low, right?
Yeah.
See, look here. See, it says above 50 indicates industry expansion, below indicates contraction. So if they're not above 50, they're not expanding, which means the economy's not growing. Does that make sense?
Yeah, makes sense.
Yeah. So these are the things we look at, and these are the things I look at, right? And the other thing is, I look at average hourly earnings. Look at this. They said it was going to be zero point 0.3, but it went to zero point 0.2. Now, you could say, well, what does that matter? That's good, isn't it? Well, is it? Is it good for somebody that works, right? And all of a sudden they're earning less money, right? If you have less money, you're earning, right? The average hourly earnings. So how does that go to average? Well, we could have part-time jobs, right?
Yeah.
And if they're not earning as much, what does that mean in their lives?
They're gonna spend less. Spend less.
Yeah,
Yeah.
yeah.
Less.
So that's a reflection of now that the economy is not, sort of moving forward.
How
Now you
about
look
the
at
unemployment?
unemployment rate. Well, 4.2. How can this be 4.2, 4.2?
Uh,
You tell me.
ha-
Like,
Wait, can you see where it says unemployment claims? Isn't it like why is unemployment claims? Yeah, it dropped. From where? I mean, no, it didn't drop. Like it's more than the forecast. That means there's more unemployment.
right, that's what I'm trying to get to, right? You went 223, which
Yeah.
was revised from 222. So you've been steadily going up. They said, oh, 24, a big jump to 241, right? And if you go here, and you can clearly see, look, down, and a big jump up to this maximum right here, right? This is the unemployment. This went down a little bit, but came back up to level to that, and then just did this big jump here. So if that's the case, right, do you really think the unemployment rate should be 4.2? I don't think so. I think this should be a little bit higher, but I don't do those calculations. All I'm looking at is this data right here. You got 240, and now listen to this. This is unemployment. These employment claims, right? Number of fired employment in the first time during the past week. Now remember this: people that got laid off, right, and they got their severance, maybe have not put in their unemployment claims yet, right?
Yeah, yeah.
So we caught up with all that yet? Maybe not, right? So could this go high? Yeah, like we have to be careful. I want to look at this. Look at ADP non-farm employment change, 62K. Look at this, 140. It was 62K. Want to know what that is? The estimated change in the number of employed people during the previous month, excluding the farm industry and government. So we take away government, and this is real life of what is happening in the country. 62,000, that's it. And this provides an early look at employment growth, usually 2 days ahead of government-released employment data. But it's designed to mimic source chain, blah, blah, blah. Job creation is an important leading indicator which accounts for a majority of overall income. ADP analyzes payroll data for more than 25 million workers. I like this. I've always liked ADP, right? And you look at these numbers, seem a little bit more true to me than, and they have corrections too. But I just look at this and I go, that's 62K? And then we have this. You know, I want to see this. This is okay. Yeah, like job creation, right? Leading indicator consumer spending. Okay, so you've got these jobs, but consumer spending was down, right? So just because you got 170K, 70 some K, you got more than you said. But look at the month before, 185. All right, and this here revised from 228. 228 to 180. That's nearly 100,000 less than they said it was. Close, not quite. Maybe my math's off. Do you understand what I mean?
I think so, but I was thinking.
Well, they said it was going to be 228.
Yeah.
And then they revised it to 185.
Yeah.
So that's quite a drop, don't you think?
Yeah, but yeah, I guess. But March and February was okay. Isn't it like I was thinking maybe something seasonal that maybe during this time it just drops lower, and then I mean, is it really a big deal?
Keep looking. I'm looking for a trend. I'm looking for the trend. So the actual 14K in January ended up being 307, right? And that was revised from 256. So that was really good, right? But then you look at March, 151, they forecast 159, but it went to 125, revised from 143, right? So another revision, another low number, right? So then you go to April, forecast 137, way less than 159, way less than the 151, right? It came at 228. However, this previous, right, this previous one was 151. It got revised to 117, right? Now this 228 got revised to 185. Yes, it's higher than this one. I get it. But the numbers to me are starting to be low and concerning. So I don't get excited about 178. I don't, because it's a lot less than 185, right? So I don't know. It's just how I think. That's all, right? I try not to react This to me is not an anomaly, right?
Mm-hmm.
This was an anomaly. I traded this 228 over 137. Yeah, it was okay. It was good, right? We got some good trades there, temporary, but it worked out. But then, you know, it wasn't really a true number. Would I have traded 185 against 137? Probably not, but I don't know because you never know what you would have done, right?
Mm-hmm.
So, you know, so all this is doing is creating the whole uncertainty thing that you're talking about. And if we go to next,
Yeah, what's for next week?
yeah, let's look at it. So next week, what did I do there? May. Okay, here we go. There we go. So the big question, are the Feds going to lower interest rates? That data that we just looked at, would that cause Powell to lower interest rates? Because Wednesday, the federal fund rate is there, right? It's right now at 450. Is he going to lower it? I
Is
don't know.
is he speaking on Wednesday?
I would think so, yeah. He's a
Mm-hmm.
FOMC statement, so
Mm-hmm.
he usually speaks, right? So he's going to say something. But, the question is there, is there enough?
If he
Now,
announces he's gonna cut rates, does that happen like immediately, or how does that work?
yeah, basically the rates are cut and everything's adjusted accordingly to that rate.
But in the
Yeah,
same day.
yeah, yeah,
Oh, I see.
yeah. As far as I know, it might be end of the day, start next day. I don't know,
So
but
if he wakes up and says, you know what? I think I'm gonna cut rates. He does it. Done.
yeah, I wouldn't be now. A couple of things wouldn't surprise me.
Mm-hmm.
The first thing that wouldn't surprise me, he stands pat. He doesn't do anything because if you look at everything, he should stand pat. He should,
Yeah.
based on how their monetary policy is, based on all that and
So
all that kind of stuff, and
he's just
what
gonna
I've been
say
reading.
the same thing that he said the previous meetings. Like, oh, we're looking at the data. We're not certain yet. We need more time. And
Yeah,
yeah,
because the one thing he was concerned about, and he was very open about, was the tariffs,
tariffs. Yeah.
right? And we have not seen the full effect of the tariffs yet,
Mm.
right? We're starting to. There's they're saying, oh, we've made $70 billion. Or, well, good for you, but we haven't seen that pain or that gain as of yet. Would you agree?
Yeah, but I also don't know like if tariffs are a big deal for now because like Trump announced tariffs and then he has new agreements with some countries and then he cancel and he paused the tariffs and it's like I don't even know if the tariffs are actually into effect. Uh,
Well, that's kind of, yeah, I agree.
yeah.
So if you're the Fed guy, you have the same thing in your mind. You say, well, how is this going to affect everything? We've only just gone into the first month,
Yeah.
April. What's that going to tell me? Nothing.
Nothing.
So we need to see. I here's my prediction,
Mm-hmm.
right? And take it how you want it, right? He's either going to do one or two things.
Mm-hmm.
He's either going to cut or he's not.
Mm-hmm.
That's my prediction. No, I'm just being funny. I really don't know what he's going to do, really, to be honest. I wouldn't be surprised either way. I say, yeah, okay, you got pressure from Trump, so you cut to 425. Okay, here's the thing. Based on what I see with the bond market, the treasuries, the interest rates there, he's going to have to cut. You're going to have to cut at some point. And how big is the cut? We don't know. So now, what do? Do you turn around and say, placate Trump and cut to 425? You're going to piss him off more because he's saying, that's not enough, right? That's
Yeah.
what he's going to say, right? But then, people around, you know, will say, hey, yeah, he's doing his thing, he's doing it right, that's good, right? So who knows? I don't know. It's a tough one. It's a tough one, right? We'll have to see. And and this is one of the things I want about. We look at our pillar, right? We look at what we look at and all that kind of stuff, right? But this is just information for us, right? We're saying, oh, look at this or look at this. What is the Feds looking at? We know what they're looking at, but we haven't really got any defined signal of data that can tell us anything. Would you
Mm,
agree?
yeah, but now
Yeah.
my question is why? What if Powell cuts the rates and yeah, there's no data indicating that cuts that the rate should be cut, but what if he does? Like, how would that affect the economy?
Well, that's a good question. It really depends how much he cuts the rate. So
Mm-hmm.
I'll ask you this question. So let's say you're a guy, you have a company, right, and you're wanting to, invest some money, you want to buy some stocks, you want to do something,
Mm-hmm.
right, and you're heavily tariffed on your product that you buy,
Mm-hmm.
right? So you need to borrow some money to pay for this,
Yeah.
and then he drops the rate by 25 basis points to
Mm-hmm.
425. Is that
Mm-hmm.
going to excite you?
Because that way I can borrow money and pay less interest.
Well, is 0.25% enough for you to get excited?
Not really, but
Yeah, that's
maybe
my point.
some people will get excited. I mean, like, is that? I know it doesn't get too exciting, but is that gonna do anything bad for the economy?
I don't know.
Yeah, we don't
But
know.
let's think logically, right? You just said, yeah, maybe. So maybe you do something, but not a big thing,
Mm-hmm.
right? Oh, well, they're coming. See, because if he cuts once, what does that mean?
I don't know. What does that mean? Yes.
Well, usually when they cut like in a row, right? So the odds are that if he cuts,
He needs to
other
cut
cuts are
again.
coming,
Uh-huh.
right?
I
Does
see.
that make sense?
Okay,
Right?
yeah.
So when you look, if he cuts 25 basis points, you go, okay, let's get ready because he's going to cut again. I'm going to wait for the second or the third cut. How big is the second cut? I wouldn't be surprised if he cuts 25 basis points and then the second one is 50,
Mm-hmm.
right? Then things are really going to rock and roll, right? But we'll see. We don't know. We just don't know. They work off on a different plane, and it's a totally different thing. So I like reading this stuff. I like looking at the data. I like you know sort of trying to understand it and stuff like that. But at the end of the day, it's not it's not me that makes those decisions, right? It's not me that sort of says, "Oh, I know what he's doing because last time this happened, this happened." The world has changed.
Mm-hmm.
We are in a completely different situation than we were 2 years ago, 5 years ago, 10 years ago, 30 years ago. So now it's like I used to trade the news a lot, and now I very rarely trade it now because it's really difficult to trade. And we
Mm-hmm.
talked about this last week about the anomaly and stuff like
Yeah.
that. And I typically don't do it. And I typically don't get caught up in what I call the noise. And again, just to simplify it, can you see my chart?
Yep.
Yeah. All right. This is simple. This is how I'm going to simplify it, right? I have a bias. My bias is very, very simple. Below this level,
Mm-hmm.
sell. Oh, I didn't, I can't spell. Good job this is not an English lesson, eh? Below this level, I should say look to sell, not just sell blindly. Look to sell. So that means above this level, look to buy. That's it. That's exactly what I do. And this may not be a horizontal. This may be this may be this, right? It may be down this. So above here, buy, below this, sell. Does that make sense?
Mm-hmm.
So it doesn't matter what's going on with all the noise. It doesn't matter.
Mm-hmm.
But if I'm down here and I'm saying, oh, I'm looking to sell, and they say, oh, I've got some fundamentals coming up, and the central bank are looking to see what these numbers come out at. They're monitoring them. Oh, before I do anything, I'm going to watch it. I'm going to see. Oh, this came out. Oh, good. That's on me. Look for you know, an area, a level, or something that I could sell, that I could use, like a pin bar or whatever, Fibonacci sequence, a swing that I can sell down. Make sense?
Yeah, makes sense.
I got to show you gold because I'm still in that trade of gold,
Oh yeah.
right? And we all know, if you guys remember, I am very bearish on gold,
Mm-hmm.
much to the surprise of a lot of people, right? But let me get rid of this. Sorry.
When you get rid of
But
those lines, can you recover? Oh, technology.
but once I write on this, I can't.
Okay.
But doesn't matter. It's irrelevant, right? The fact of the matter is, like you and I talked about this level right here, right?
We said this was a king's crown, or well, I said it was a head and shoulders, and after the shoulder, it was coming down the body.
Yeah,
Yeah.
and it came down to here, right? But it bounced
Yes.
up again, right?
Yeah.
And I'm still looking for to the downside. I'm still trading to the downside. And look at this price action, right? This was really well away and it created another trend line, right? And then went down and then bounced back up, touched the trend line and bounced back down again. It's below this level. Try to test it, reached the 50%. Now I think it's coming down here. Where do I think it's going? Well, I'm simply, let's do this one.
We're
I'm simply using the Fibonacci. Look at the Fibonacci. And the D extension is right here. Now, I have to be aware of the fact that there is, this level right here,
mm-hmm.
right? I got to be aware of that. There's this here. So maybe it doesn't come in. Maybe I just take my money from here and say I don't have to be greedy because this could end up turning around and going up. Now, somebody asked me this really good question. They said, the USD is like strong, right? Why doesn't it have the power for gold to be a higher price? And I said, well, this is not a strength and weakness scenario.
I
'Cause this
didn't. I
is a
didn't get
commodity.
the question.
You didn't get it?
No. Why if the U.S. is strong, or why if the U.S. is weak?
So if you look at this chart, right, it
Yeah.
says XAU USD. So
Yeah,
it's going
gold
down.
against. Uh-huh.
Right,
That
right.
means
So
the
it's going
U.S.
down.
is stronger.
That's what he said,
Okay. Okay.
right? But is the US strong right now?
No, I mean, I remember last week it was at the low level, right? So,
Right.
yeah.
So we could look at other currencies, right, and see, right? So we could just go to the Great British USD, right, coming down, right? We could look at the Euro USD, kind of floating down. The best one we could look at is the US dollar, right? So we look at the US dollar. Where's the US dollar, right? And I told a couple of weeks ago we got to get some US strength, temporary US strength, right?
Mm-hmm.
because it needs to correct a little bit. So I'm looking for that correction, right? I don't want this one here. So from here to here, there's the 50%, right?
Mm-hmm.
And here's the 50% from the main swing, from the main high to the low. If I follow the Fibonacci, here's the 382. So here's my range of where I believe the market is going to go. It could go to here or to the 50%. Look at that, right? I believe it will hit the 382, right? But obviously, you never know. I do a Fibonacci sequence here. Look where the extension is, right by the 50%. Could it go up further to hit the 382? Yes. So this is US strength, right?
Mm-hmm.
So we should have downside to the euro, downside to the Great British Pound USD, an upside to the US JPY. What else? Upside to the US Swiss, kind of going a little sideways. Aussie. Now, this is different. It's going up against the Aussie.
Mm-hmm.
Look at that. Interesting, right? Uh, New Zealand coming down a little bit. And the last one, let's look at, where are you? Where are you? Can't find you.
USD Mexican peso. I never seen that.
No? Okay, we go there in a minute. I'm looking for the US CAD. I'm looking for the US CAD. Where's the US CAD?
There.
Ah, here we go.
Yeah.
US CAD. Look at that.
Oh.
Right, look at this base. Look at
Mm-hmm.
this base. This is a good trade here, right? Look at this base, but that's a 4 hour. Let's look at a daily, right? It's nice. Do we have a D extension that's been hit? Let's have a look. Yes, look at that. The extension was already hit, forming a new swing. So what do? We could go to here, then go back up to the 382. We'll see. But we got a lot of like sideways uncertainty movement, right? But we still have pressure to the downside, right? There's still lower highs, lower highs, lower highs. Make sense? If we place that structure here, we could do this. We can put this like this, and we can put this like this.
Mm-hmm. And if
that
it
gives
breaks above the trend line, it's going up.
Well, yes, but I would do this. I would put my high right there across these highs and say, when it breaks there, I'm trading up to there. That's it.
Mm-hmm.
So, yeah. So we put those structures, but we can see we have some U.S. strength, right? So now going back to gold, this fits
The
the narrative, should it not,
Yeah.
of this
US.
coming down.
Mm-hmm.
Yeah, yeah. So it go like because in uncertainty, you know, everybody jumps to gold. Yeah, but we have U.S. strength right now. So this is going to be an important area for me, right? Two things. I'm up a lot, by the way. I mean, I got up way up here, so I'm doing really well here. So the fact is this, is if I'm below here, this black line, right, which passes all this stuff, and it comes down, and it goes and corrects, but holds, and then comes back down, I'm going down to here.
Mm-hmm.
If it comes to this level, right, and spits back up, right, tests and holds, and comes to here, and breaks here, I'm getting out. Does that make sense?
Yeah, makes sense.
Yeah. So I want it to come here,
Mm-hmm.
but the market may not do that. Why? Because there's uncertainty, and
Mm-hmm.
is there a bias for gold to go to the upside? Yes, possibly.
The uncertainty.
If the house of cards that I believe that all this is built on crashes,
Mm-hmm.
which I think it will, right? Gold's going up. So I have to be aware of that. I have to be careful.
What do you mean the house of cards crashes?
Well, the right now the S&P, right? Let's go to the S&P.
My favorite.
Yeah, yeah, you like the S&P. And
It seems like it's having for this week it's been having a nice recovery. Don't you think from that bottom? And I saw and I heard people are calling this one the bottom.
100% agree with you, but 100% don't agree with you. I agree with what you're saying. I agree with what everyone else is saying, but I don't think this is. I think this is going to come here and then everything's going to go boom. Could I be wrong? Absolutely, I could be wrong. But I also, at the beginning of the year, said there's no way we're going to make a new high this year. And what are we looking at here? Like, let's build some structure, right? So we've got this level
This
right
is
here.
what, the monthly or weekly?
This is the weekly, right? We can go monthly if you want. You want to
No,
do
no, no.
monthly? We'll
It's
do
okay. It's
monthly.
okay.
No, I'll do the monthly first, just to make you happy,
Okay.
right? Monstrous down, monstrous up, right? This is huge, right? And it's like, oh my God, right? Big rejection, right?
Yeah.
So it's like, but look what you have in the way here. Be careful. You have this in the way. But there is a reason to maybe want to go further up here. And what is that reason? That reason is the mighty 50% retracement of this candle. And this 50% retracement is very doable. Why do I say that? Well, I'll show you. Because not only is it a 50%, right? But it pretty much matches those lows, right? Pretty much matches. Look at these, right?
Yeah, yeah.
Matches high. So it's a good. It's good. It also. I want to show this. Look at the trend line, right? Break that trend line. If it breaks this trend line and closes above here, I may lose my prediction that it won't make a new high. so, so we'll see. But you got to get past this first.
Mm-hmm.
And this is the extension, I believe. So this could hit here, get everybody excited, and then do what? Plummet. So let's go to the weekly.
Why do you think it would do that? Like, why? So okay, so this is price action. What is moving this one right now? Like, probably this last week was the bullish reaction was because of uh tariffs being paused, and then I don't know, the GDP not being really affected, Trump saying there's no inflation. What do you think this happened, like this recovery?
This is what you said. Exactly what you said. There was some confidence in the traders, investors. They got some confidence.
They had
But
confidence.
I also believe if you just look at this, right? This to me is a simple swing, right? One, two, three, four, right? One, two, swing, hit the D extension, created another swing, and now it's moving up, right? Created another swing. Where is right now the target would be the green line here, so it will be this green line. So this could come back down to there. Now that's all great. That's how I look at this, but I want to show you something else. I also look at this, the overall swing, the overall high to low. We've just hit a 618, right? Look at this area right here, right? There's a lot going on here.
Yeah.
There's a lot of highs, a lot of highs. Can we have some rejection here? Look at this rejection. Look at this rejection. Even just up a little bit further, we have the 50%. Could it go up, hit the 50%, and then turn around and come down? Because the blue is up here. right? It could still come down and come here, right? So I like this weekly chart because this to me is a good framework. This is a good structure. The other one's messy. So I like this structure. And
You mean the weekly chart?
yeah, yeah, see, because of this, and you have this going up here, and there's their swing, right?
Mm-hmm.
There is their swing. And we have this coming down to here. Now, is this too far here? Well, I don't think so, because you have these lows right here, right? But you have these lows right here. So we have some room, I believe, that we can possibly hit this D extension. Now, what would make me say that it won't hit the D extension? Well, if we come to here and we get a rejection, right? We got highs, we got open, close and opens, we got a whole bunch of close and opens here, we got a whole bunch of one right here. This could just come down and hit this and then go back up. Now there's another thing. You got
Um.
that, right?
Yeah.
Then there's one more thing.
Okay.
One more,
One more.
right? See this up move right here? This got
Yes.
broken. This got broken.
Mm-hmm.
So, and this is a 1, 2, 3, 4. We could have one swing, but it got broken.
Mm-hmm.
So that's why I think we're still coming down. So there you go. There's my bias.
Okay.
Um,
I had more. I one more question about this one that you think is coming down. Um.
I don't think it's coming down yet.
No.
Well,
Okay? So your prediction for next week will be we're still in an uptrend, we're still recovering, or it's choppy, but not.
no, it's retracing. It's retracing to this from this level here. Like, okay, so the market was gently going up, and then it made a big down move, right? This is an anomaly. Took out a low, right? So what does the market have to do? It has to correct. So it's correcting itself, right? But this move is still a good move. They still want this move, but they don't want it to keep going without some kind of correction. So I still believe this is valid. And another reason why I like it, there's lots of reasons, right? Look at the structure here, right? So it hit the trend line, broke it, but came back up. So, but it's still well away from the trend line. So I'm expecting it to hit here. I'm expecting it to go sideways a little bit. Could go sideways for a while, boom, 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 and then break, test, boom, down. So this could be a long time. But I just am saying personally, and again, I might be wrong. Personally, I just do not see a break
Of the all-time high.
of the all-time highs at this point. Will it come? I think it will, but I don't see it yet.
What type of
Now,
news? Sorry. Okay. What
oh,
type of
go ahead.
news? What type of news do you think it will make the S&P drop again lower?
Well, I think we're getting
Or like trying to link it with the fundamentals, with the macroeconomics. What data?
well,
Mm-hmm.
yeah. Well, let's look at the companies themselves, right? The Metas, the
Tech companies and
yeah, they're getting shit kicked, right? So it's like whenever you get some kind of okay, think back to 2008.
yes,
2008, we had a terrible housing crisis, mortgage crisis, and it was a disaster, right?
yes,
But they found the data and the signs in 2007.
yeah, yeah. Many
And
people
it wasn't
realized,
until 2008, 9, I can't remember exactly,
yeah,
over a year later,
yeah.
even when that it finally crashed.
Mm-hmm.
And why? Because the market makers try to prop it up to get what they want. So this could be a prop up. We don't know. We don't know who's propping this up. This could be, you know, just a natural thing of, hey, it's over. Let's get in. And then all of a sudden, something happens and the market turns around and goes, no, like all of a sudden, you know,
So, like you said, doing an extra push.
yeah, it's always an extra push. Like, you know, I look at this as it is right now, right? And we get this like this. This is quite a down move, right? It wasn't gentle. It really pushed very close to here, right? And then it pushed back up again, pushed back up again. When we were around here, we were expecting it to come back down, pushed up again. We were expecting it to come down here. It pushed back up again. Then we finally got it. So this was like 3 times we were expecting it to come down and it didn't come down. So we're looking at this and we're saying, oh, it's going back up again. Is this going to go in a straight line like this? I don't know. Could this come back here and hit this? Yes. Then come back up here and hit that, and then come back. That's more gentle. That's more gradual. That's more like you want the market to do because you have consistency.
Yeah.
Do you have faith in the market that all these top companies are doing well? They're hurting right now. They're selling us they're hurting. So if they're hurting, why is the S&P going up? Right. Does this make sense of what I'm saying?
Yeah, it makes sense.
Right? So, and as I said, I could be totally wrong, and this could just shoot up and make a new high. But I'm being practical and I'm being logical. And I'm saying, look what I have here, look what I have here, look what I have here. I have a 50%, I have a 50%, I have a de-extension. This could go up to here. Yes, it could. Then it could turn right back. And come right back, and hit here. And then it could go back up, go back up, go back up, go back up, make a new high, right? And come back here, boom, 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 come back. And start to have that nice trending pattern of price, what's the word, balance, right? It's not all over the place, right? It's steady. We like this. This is nice. Oh, a little cutback. Nice. Oh, a little cutback. Nice. Oh, big correction. Oh, up. This is what we like. We like that. We don't like this. Boom, choppy. We don't like that. That's too erratic. We want stability in the market. Is this stability here? Is this stability? No, I don't think so. I prefer nice and easy, nice and chilled, nice and relaxed. That's why I think this could come back here, come back to here. It could break and go down further, right? Based on what we're hearing and what's going on, we don't know yet what that results are, right? We can talk about it, but we don't see the results. We need to see the results of that data. And I'm talking about the tariffs. The tariffs will be juggled. They've made lots of money. They may turn around and change it all. They may get a deal with China. Who knows, right? So Carney's going to the States next week.
Who's going?
So Carney, our new prime minister.
Oh, really? I didn't know.
Yeah. So, and he said, I'm not expecting anything. I'm just going there. We're going to lay out what we want. We're going to talk about things, but I'm not going in there with any expectations. So we'll see what happens.
Interesting.
I had a conversation, like we've got to get the real information, right? This is the key, right? People tell me about, oh, look at the dairy, look at this and everything. 200%, it's bad, it's right. I go, no. The new agreement with the Mexico, the CAUSMA? Yeah, right. So they had that agreement, right?
Yeah.
And in that agreement, do you know there is no tariffs on milk?
There's certain products that are exempt.
And the thing is, it's a limit, right? So if they had a certain amount, right, everything was zero. But if they went over, they charged them. And some of it is like 300%.
Wow.
You're right. But they never got to that point, and that was an agreement that he negotiated.
Yeah, yeah.
So he's bitching about it. He was the one that did it. So it makes you laugh. Now, they're bitching because when the milk comes over, they charge them GST. Canada charges them GST. And why do they charge them GST? They charge them GST because they don't want them to have an advantage against the local producers of dairy in Canada, which makes sense, does it not?
Yeah.
Right. So now they're bitching that they have to pay this GST. But you can get back the GST. You just have to apply for it at the end of the year. You have to fill out the paperwork. So you get it back anyway. So when you start digging deep and seeing all this stuff, you go, oh my God, right? And so people will ask, why? So why the
Why?
tariffs? It's simple. Just making money.
For who?
What is he bragging about right now? The tariffs have brought in $70 billion, the most money ever anyone has brought in. Like, this is what he does, right? So it's all about money so we can pay off the debt. The U.S. is in terrible trouble in debt. Terrible. We've talked about this.
Yeah, yeah. Has he done any progress on that?
Well, he just made $70 billion on tariffs. So you tell me. It seems like it. How much money has he been saving from not having all these programs, all these money he's been saving and not paying people? He must be saving a lot. And I said at the beginning, you asked me privately, is what he is doing the right thing? What did I say?
Yes. The long term.
Yeah, I said yes because it needs to happen. It's just the way he went about it, right?
Yeah.
So it needs to change. And even Carney has said the world of, how we do global and this needs to change. It does.
The global order.
And the fact of the matter is that, why do people do it? Well, they do it for the simple reason of gaining income for themselves to pay for programs. That's it. And to protect local, like we have oil. Do you think we're going to allow Venezuela or someone else to sell oil in Canada to compete with their local product without a tariff on it? Of course not. We want to protect our own. Now, maybe we need the oil. So the tariff is not that much. We say, well, you can send this much, but if you go over, we're going to tariff you this much. Or maybe they're going to say, yeah, this much. And why do they say yes? Because if they bring it in, Canada's making money with the tariff. Oh, it's like a tax. What do you call it, a tax? Why do we get taxed? Why do we pay tax? What's the reason? It's not to punish us.
It's to contribute to the state.
There you go. We have a province.
Yeah.
So the province charges taxes so they can make money so they can build shit. Right? And federally, we pay taxes. But do you know there are rules in the taxes where you can find loopholes? It's not tricks, it's actual facts. This is what you can do to not have to pay taxes. They don't, people say, oh, you have to pay taxes. There's two things in life that's full 100%, taxes and death. No, there's only one, death. Well, there's two, being born and dying. That's it in life. You don't have to pay taxes if you don't want to, if you do it correctly. And they provide you with this information. The challenge is that information is fucking hard to understand.
And they make it
Why
hard
is it hard? Why is it hard to understand?
because they don't want people to know.
Exactly. Why don't they teach this finance stuff in class at school, at high school? Why?
It will be
Why don't they
dangerous.
Yeah, no, they don't want you to know. But the world is changing. It's going to be an interesting next 50 years, that's for sure. So, is there anything else we want to look at? It's 10:30 right now.
That's right. Yeah, time flies.
It does, doesn't it? Time flies when I'm yakking. So, no questions?
No, I had you answered them so good.
Yeah, I didn't get any questions from anybody for this week. So, it's nice when we get questions.
Yeah.
Yeah. So, yeah. So obviously next week, look out for you know the FOMC press conference statement and federal fund rate. It's very important, right? And of course, we also got Great British Pound too,
Hmm.
official. This is interesting. Like, I don't know if you understand this
It means
calculation
it
here.
means 0 wins, 9 defeat. No, nine. No.
It's how the vote is reported. Look, it says it XXX format. The first number is how many members voted to increase interest rates.
Ah, yes. The
But look
second
at
one.
this. The second number is how many voted to decrease rates, and the third is how many voted to hold rates.
Oh, but this
So
is
that's.
this is
But look at the forecast. They're forecasting nine is
nine one
voting to
to
decrease
decrease.
rates.
Wow.
Decrease rates. So this would be interesting. And the official bank rate right now is 450. Is it 450? Yeah, and they're looking to 450. So they're looking to reduce interest rates by 25 basis points. This is why I'm saying there's a good there's a good possibility that Powell does the same because the euro have reduced like crazy. The
Mm-hmm.
euro now is I think they're at two something. Yeah, look at the euro, 240,
Mm.
right? So New Zealand 4, Aussie 410. So we're going to start see some movement here, I think.
Mm-hmm.
It'll be interesting, but this could be interesting, guys. It would be interesting if you see the Great British Pound,
Cutting.
because they're so adamant. Maybe this could be a 50 point. Maybe this goes to 375.
Mm-hmm.
That would be crazy. But anyway, we just have to wait for the data, see what
Yeah.
comes,
It,
right?
it will be fun. I remember the last Powell meeting. He said that someone asked if he keeps in touch with the other like central banks, and he says yes, they.
Oh, 100% they do. Yes. That's a big, it's really weird. I've had this conversation many times with students and clients, and they
Mm-hmm.
say, "Oh, why would they talk?" I said, "Come on, you don't understand. This world is made up of all these countries. Everybody needs everybody. And if you don't think they talk,
Mm-hmm.
of course they talk. They have a meeting. They have a yearly meeting where they all meet
Mm-hmm.
and do a big whatever and talk about stuff. So yeah, of course they keep in
they
touch.
they have a big whatever and talk about stuff. That sounds funny.
Yeah, go play golf, go
Yeah.
shoot the shit, right? Have a little couple of meetings and couple of this. And yeah. I think most people are a little surprised at how active these central banks are.
Mm-hmm.
And that's why I go to the Cleveland. I like the Cleveland Bank. I've told you that before.
Yeah, yeah.
They have some good shit. I like it. I read a lot of stuff with them. They have good. They have actually an indicator they built for real-time inflation rates and stuff like that, and where that is. So I monitor that. And don't listen to this stuff. I listen to what they do,
Mm-hmm.
right? So I think a month or so ago we talked about looking for the real information. Where do
Yeah,
you
yeah.
go? You said Google. I said no. Go to the source. Go to the Fed. Go to and the Fed's central bank. There's 12 of them,
Mm-hmm.
right? So that's why everybody has to realize there's 12 of them. You also have to realize each central bank has a different mandate of wherever they are in that area, right? Because the U.S. is big, so the New York maybe does things differently to what they do in Cleveland and what they do in San Francisco. Does that make sense?
Yes.
Yeah. So they have different needs, right? Different companies out there, big tech companies there, right? So they have different needs. So then you have the New York is kind of the main one, right?
Mm-hmm.
But it's interesting. You go to the main Fed site, you look at a lot of things. That gives you the overview of how it's fascinating. But it's fascinating to somebody that is interested in it. If you're not interested in it, you're going to think it's boring as shit. So you're not going to like it.
Mm-hmm.
But I still say that if you don't keep your finger on the pulse, you're
Mm-hmm.
kind of missing out, right? There's a lot of stuff where I've watched and listened and read that have helped me with my trades,
Mm-hmm.
right? But and you guys know I'm a level guy. I trade levels. I look at close and opens and 50% retracements, and that's how I set my trading up for the next week. And we didn't have time to go over that right now. We did a little bit, but not the actual trading itself. So, but maybe we should reserve a day where we actually completely go over that whole process. I don't know what you think of that, what
Yeah,
your
yeah.
thoughts are.
So sounds good. Yeah, yeah. I think
Yeah.
we have many things to cover.
Yeah, it's part of the three pillars, and did we show the graphic of the three pillars at the
No, we
beginning?
didn't. We didn't.
We
But
didn't. No.
no.
Well, okay. But I think a lot of people know what they are. But we can put it up and show it as we bow out,
Yeah, sure. I'll leave it there
just just
with
to
the
remind
music.
everybody, yeah, what we do and how we look at things.
All right.
And I think that's important. Anyway, thank you, Isaac. Appreciate your time.
Thank
Thank
you,
you, everybody.
Ashley.
We will see you hopefully next week.
See you next week.
Take care, everybody.